How to make money from options. Hey guys, this is Mehdi at Choosing Options. Today is Monday, August the 27th. I placed another order today on Las Vegas Sands. Today I'm just going to show you how to make money selling strangles. Um, First of all, I just wanted to go over how I found the trade. How did I find the Las Vegas sand? But first, I just wanted to talk about a little bit on the options itself. Um, you can either buy options or you can sell them. To my experience, selling options, you have a lot more potential making money than buying them. I do buy them for different reasons, but selling them is better if you want to go long, make money on options. Selling options is a better route. You can go either way. There are some people making money buying them. If you're one of them, please let me know, and I want to know what's your strategy on buying options. I usually buy options uh, for insurance purposes to reduce my deltas and all the great stuff. Anyways, um, so you can sell calls or sell puts, or the way I do it, I sell them both together, which is called strangles, as in short strangles. Shorting strangles, another way of saying it is selling strangles. Um, so basically, you sell a call and a put at the same time. That's called a strangle. So let's go over, first of all, how I find the trade before I put anything on. Here's a scan that I ran on the market. I do these scans on a daily basis. By the way, if you want a copy of these scans every day, at least once or twice a week, shoot me an email and I make sure you get a copy of this scans. Um, so basically, the bottom line is you want to find options that have high implied volatility, which is this column, and sort of stable within their own range. So because you want to take advantage of the decay factor on the options price. So basically, here's the scan. So this is the price column, price change, the volume. I usually trade anything above 1 million and up. Daily standard deviation, which is very important. If I find all the criteria is fine, and but the daily standard deviation is higher than 1 or below -1, I hold on to the trade. I follow it a couple of days, and then uh, I place the order if it still looks good. This column is implied volatility percentile of its own range of these stocks. This column is implied volatility minus the historical volatility. And this column is the 52 weeks range of the stock itself within its own range. This column is the implied volatility. This is the historical 30-day volatility. This is a 2 weeks historical volatility and 1 week historical volatility. So if this column is this number is bigger than this one and this number is bigger than that one, it's going to trigger a 1 over here. That means the implied the historical volatility sloping down and implied volatility tends to follow up. So if you sold something at a high percentile, it tends to the percentage as it goes lower, the options gets cheaper. So when you sell, it's towards your advantage. So basically, that's the that's the bottom line. That this is what I do every day. If this number is 1, which is exactly what I said in reverse, see 33, 34, and 42, it looks like sloping up. This would be a good one for buying options, or I would say buy straddles. I covered that in another video, which straddle is buying a put and a call at the same price, which is a good strategy for insurance purposes. Anyways, let's follow this column and see what we got. So everything is 0 until you get to here. This, the percentile is 69, but the reason I didn't trade this and Oracle too, both of these, they both look good, is that the earnings are coming up soon. So I average about 27 days for every trade that I put on. That means if I sell something today at $1, I usually buy back at 20 cents in about 30 days from now. Or 20, I should say specifically 27 days, I should say. So I go down and I run into this. I ran this, I sold it, but I made one mistake. I covered that earlier in the video. Everything looks good. See 23, 22, 15. So the volatility sloping down, which is good. It's 56%, which is not bad. But the thing that I'm worried about and that I noticed too late, and I already placed the order, is the standard deviation, which is higher than 1. Well, today is a pretty strong day. Everything was up. S&P was high. Here's spiders, 1.3, which is a pretty active day. So towards up. Everything is going up today. But I didn't close the order. You know, I'm just taking a risk. Hopefully by tomorrow or next few days, it's gonna die down. But you place these orders in your paper account and you just live and learn. Um, let's just follow this for a few days and see what happens. Once I close this order, whether I lose or win, I'm gonna create a video and show you how it went. This is the spider, as I mentioned earlier. I like to go anything above this number, whatever the spider's percentile is. In this case 43, I like to go at least 10% higher, which this would cover it. Facebook, I'm probably gonna follow it tomorrow. See, this one has a higher standard deviation to 1.27. So everything is pretty active today. I placed this one in, I wasn't paying attention. Everything looked so good that I placed it at the end. I said, oh my God, it's got a pretty high, wide move today. So where did I place the order? On a call and put side, I went out to October 19th. I always do monthlies on these options, always monthlies. The only time I do weeklies is if it's really liquid, like indices, spiders, diamonds, Dow Jones. Those guys are pretty liquid, so you can do weeklies on those. You want to go 30 days out and the maximum 60. If it's between 30 to 45 days, I take profit at 80%. So if I bought it $1, I buy it back. I mean, if I sold it at $1, I buy it back at 20. If it's higher than 45 days, it needs a little bit more time. So I take a little bit less profit. So instead of 80%, I go down to 65%. So if I've If I sold it at $1, I buy it back at 35 cents. That's how I do this. And basically, I go it's roughly about 75 to 80% probability of profit. That's usually around 90% on call and 90% on a put as far as the prob probability of being out of the money. If your brokerage firm doesn't give you that information, what you can do is shoot for the deltas, delta 10, close to delta 10 on a call, and delta minus 10 on a put, and that would be close enough. So I just wanted to tell you about this order. Um, if you have any questions from me, just shoot me an email, contact me, subscribe, let me know. I need your feedback. If I can do anything to uh, do a better job on my videos, let me know. Another thing I wanted to mention, more more details on how you find these options on scans and all. Look at my first video. I'm going to post it. If you click here, up here, yeah, you run into it. And the second one would be all the uh, how to put on a strangle. That would be a good video to watch as well. Um, Anyways, shoot me an email. If you have any problems with any trades that you have, let me know. Maybe I can help. Um, at any rate, happy Monday and happy trading as well. Thank you. I'll see you next time. Bye bye. Sorry guys, I forgot to tell you exactly the exact trade on LVS. Um, on a call side, it was October 75, and on a put side, it was 57 and a half. October 19th, and I collected 56 cents for adding call and put together. If you do this trades, you should be able to make, I would say, 1% per day. I had some videos on this 1% per day, making 1% per day, and I think even better. So far, I've been doing 65%, close to 30 days, which is like 2.5, 2% per day. Anyways, thank you. See you like next time. Bye bye.